Good afternoon, everybody. Welcome to our Selecting an Option Strategy webcast. I'm Connie Hill. Happy you joined me here today. We get together every Tuesday at this same time, right at the closing bell, for our discussion as far as, what option strategies might we consider given our current market conditions. Now, last week I gave you a little bit of an introduction, and we used for a few minutes the Theo price calculator on the option chain. We're going to use it today in a little bit different way, but we're going to continue to use it a little bit because I think it can be a really helpful tool for you as you're trying to decide, I think a lot in managing the trade as well as getting into the trade. Okay, so that's what we have on tap today. Now, I am joined in the chat by Cameron May. Cameron, I guess he's doing double duty today. He said he's back again. So he and I've done a lot of chats today. In any case, he is out there to help me field questions. I'll keep my eye on the chat, and if you have those questions, go ahead, type them in. If there's something I can't quite get to, then Cameron will help me out with it, or maybe give you some instructions as well. So he knows everything we're talking about today, inside and out. Now, I hope you're following us on X, and if you're not, I extend that invitation to you. I'm Connie Hill, CS. Cameron is Cameron May, CS, and we'll send out educational content as we see it, maybe some charts and graphs, things that we think are interesting, that we think you might find interesting as well. We'll post about it. So let's go through our disclosures and we'll get started with our agenda today. Options carry a high level of risk and are not suitable for all investors. Information we talk about here is general, educational, and informational in nature. Don't consider it a recommendation. We'll be using the Paper Money software application. It's for educational purposes only. It does a good job of mimicking the market, but it isn't perfect. Okay. Short options can be assigned early up to the option, regardless of the option in the money amount. It could occur early. Thinkorswim Paper Money does not do that, though. So I don't want you to get a false senses of security, because live markets can assign early, and they do. Past performance of any security or strategy is no guarantee of future results or success. Now, I mentioned to you that last week we talked about the Theo price calculator. Those of you that were here last week and saw a little bit about that, and I want to know if you used it in the last week since we talked about it. I want to know if you used the Theo price calculator and if you found it useful. Okay, so go ahead, chat that in. Somebody's asking about a class that we had yesterday, our ETF class. It is not posted. Okay, we have 2 ETF classes that we do not post, so you got to be there live to catch them. Okay, so that's why you're having a hard time finding it. Now, I do want to give you a little reminder about some events we have coming up, live personal events. We had a great event in Chicago last weekend, a market drive event, and a few of you have chatted in saying, yeah, that was a fantastic event. Thank you so much for doing that. We loved it. And so next one will be in Dallas, September 20th. We'll be in Chicago, October 4th, and then to sunny Orlando in October. I think, Orlando sounds like a great place to go in October, as it's kind of maybe cooling off in your neighborhood. Maybe it's going to stay warm in Orlando. In any case, register early because these sessions do fill up. All right. We always want to take a look at the market conditions. We want to discuss different option strategies that we might consider using. We're always going to be looking at tons of examples. We're going to do some here today. As we look at and review a couple of trades, we're going to use the Theo price calculator in reviewing one of our trades. That's where that's going to fit in. I asked if you guys used it. Aldolfo says, not yet. Okay, Sharon says, yeah, I used it earlier. Bonus points for you, Sharon. Let's see. Greg says, yes, I used to use it a little. It is quite useful. Yeah, it really can be a nice little tool for you. I think as you start planning your trades out maybe a little bit more, that's when you're going to find it advantageous to use that calculator. Well, let's go over, actually, let's do this. Typical strategies that we might look at in this class. We've had a lot of opportunities to do some bullish strategies. So we've tackled several of these. Haven't done as much with bearish strategies. We have done a little bit, and have from time to time done something in the neutral strategies. We've done straddles and strangles primarily as we're going into maybe an earnings announcement. We've done that on some stocks. We've played a little bit with calendar spreads, and maybe a couple of times some iron condors. Okay, it just kind of depends on what the market conditions are. If they're trending either bearish or bullish versus being range bound and neutral, then we will really lean heavily on those first two columns as far as the strategies go. Sometimes we do get in a period of time when we are in neutral territory. It's been a few years, but I remember it's been more than a couple of years, but back earlier in the 2000s, I think it was 13, but I'm not positive. It seemed like we had a lot of neutral trading going on, that the market just didn't do anything. It just stayed in this big old range for a long period of time. And that's where people are finding success was using those neutral strategies. So, all right, Kevin says it's not warm in Orlando. It was not warm in Orlando last year. It was much warmer than Utah. Oh, wow. Well, yeah, it would be warmer in Orlando than in Utah. Although maybe something weird happened. Yes. Truth will always prevail says PLTR came down hard today. It did. It did have a nice hefty pullback. Let's go over and look at the charts here. We're going to zip on over. Let's see here. Let's go with this window here. I do have, we have the NDX up. We can start with the NDX. That's just fine. I have different things on the screen. First thing I want to tell you is some of you have noticed these little performance labels up here in the front of the chart. Somebody asked me if I could share that information with you, and as they were looking at it, they thought maybe they were different little tabs, but they're really just little sections, okay? And they are some labels that kind of are telling us the performance. Year to date, the NASDAQ is up 10.32%, but month to date, it's only up 0.72% and so forth, okay? So it'll give you some nice information. Let me share that with you. What I'm going to do is I'm going to go to, no, that's not right where I wanted to go to. I'm going to do a right mouse click just on this study that I'll share with you. I'm going to hit share. I'm going to go ahead and have it create that URL. For those of you that are in the class live, I'm going to chat that out to the chat window. Remember, anytime we share a script with you, it is not guaranteed as to accuracy or timing. Okay, got to know that. There could be something flawed in it, right? Let's go ahead and hit cancel here. Those of you that are listening to this on the recording, I know there's lots of you that do. I just pasted it here. And actually, I'll do one other thing here. I'll paste it in a text box on the screen that I can get rid of later. And this will have the URL for you. If you want, you can just start at that exclamation point right after the front hash. And really, all you need is that little section, or you can copy in the entire URL. Okay, so I did want to address that right off the bat. All right, let's hit send so you guys can see that. NASDAQ, I'm going to zoom in here a little bit. You know, the NASDAQ set a new high last week at that 23,969 on this day. You can see I have a flag pattern shown in here. Looked like it was consolidating in a flag. Today it looks like maybe it broke down beyond what the boundaries of the flag initially were here. What I wanted to point out to you was the RSI. RSI is an oscillator that gives us an idea of overbought and oversold conditions. And one of the things the RSI is really good at is identifying divergences. Now, a divergence is when, say, the market or a stock makes, say, higher highs and higher lows. We would expect the oscillator to do the same thing. But if the oscillator isn't, like the RSI, if it's acting opposite of that, then we want to be a little bit concerned about that. We want to pay attention. So I'm going to use this little trend line icon. It's going to let me. Let's see here. Being a little dorky. There we go. We can see this RSI, it ran up and it hit a high up here on the price, and we can see where the RSI went high right here, and then it went higher. Okay, so this was just a few days ago where it made that new high, and we would expect the RSI to be higher than it was here, and guess what? It's not. Okay, and so I'm just going to draw this little line in, kind of connecting those so that we're seeing, gee, we've got a lower high on the RSI. Now, consider it like a yellow flag. It's a warning. Hey, something could be changing here, but we need price to actually confirm that things are changing. I don't know that I would say today was definitely confirmation of that, but certainly something to pay attention to. Okay, so you might want to put that study on your charts and kind of be watching it as we look at the indexes here. Okay, let's look at the SPX as well. Most of our trades or stocks that we'll work with are either going to be off the S&P 500 or off the NASDAQ 100. So those are the ones I'll look at here primarily. Now, the SPX, it was just on Friday that it set a new high. This 64,481 high. Let's look down at the RSI. Did it make a higher high? Okay, the price made a higher high. Did the RSI make a higher high? It didn't. So we've got a divergence here as well. So again, yellow flag. Many traders like to wait for confirmation of price before they do anything, but right now they've kind of got their antenna up. What could you consider doing during this period of time? Could consider maybe putting on hedges on your trades. You could consider maybe closing out some trades if maybe they came short of their target and maybe it went up a decent amount and you're like, okay, I'm just happy, let's at least take this amount and harvest it. Okay, or you could, you maybe got in and some of your trades are faltering because of maybe what we're seeing here in the market, some traders might choose to get out of those. Okay, so we kind of move from being a bullish position to maybe a little bit more defensive. Okay, and we'll pay attention to sectors and see if it makes sense for us to move into maybe some sectors and industry groups that maybe are following along with what the market's doing. Maybe there's a transition into them. Okay, we're not going to do that today. The VIX, did the VIX end up being up today, guys? Oops, I gave the VIX an extra I guess. All right, here's our VIX. Let's see here. It ended up being up a little bit. That looks like what, 3.94%. So on the VIX, that's not really a big percentage. So up a little bit. Okay, as we're seeing maybe a little bit of weakness creeping in. We'll see what happens here. All right. I want to do a little bit of work with the Theo price calculator. And we're going to go look at the scenario of one of our stocks that we need to check up on. Okay, so the stock we want to check up on here is AMD. In fact, I've got it all open here for you. What do we have going on AMD? This is a trade we've actually had in our portfolio for a long period of time. We bought a longer dated option on it. And then we've sold calls against it. And then when that longer dated option, I think it was either September or October option, got really deep in the money, we decided to roll it out. We decided to extend the trade. So we rolled it out to a January option, a 175 call. And then the idea here is that when AMD, if it started to show weakness or had periods of just kind of going sideways, we want to sell a call against it and kind of help offset for the fact that maybe price was going sideways or maybe even pulling back to support or something like that. So we did. The last time we sold this was August 13th, which means we did it in our class last week. We looked at it on the 12th and put in the order, and it got executed Wednesday morning for us. Okay, so we sold this option here for $6. Okay, it's an expensive stock, an expensive contract. So we brought in $6. And right now the value of that call is $1.32. So that's really helped us out quite a bit in this trade. If we follow along here, we can see just on that call alone, we've made 468. That's how much we've been able to at least, it's an unrealized gain because it's not finalized, it's still sitting in our account, but that's a pretty good chunk of it, okay? Now the longer dated option, we're down on it a little bit. You can see here, we bought it for $23.10 and now it's worth $16.77. So you can see how much that $6 contract that we collect that premium on, how much that's really helped the trade, okay? Let's go look at the chart here. I'm going to pull up AMD. Jack says, anyone place the, is this the strategy of buying a leap and selling covered calls? Is there a video on this? Says Noodle Brains. It's similar to that. We bought a longer dated option, but I didn't go out the 7+ months, which is technically what a leaps contract is. At one point, because this one does expire in January, at one point it probably was a leaps contract. And then when it gets to a period of time where it's less than, say, 6 or 7 months, then they no longer consider those leaps. Okay, but you've got the right idea. The idea is selling calls against it. And we marked some of ours along the way. And I had just put in here, let's see, the new roll, I actually didn't mark that. That was on the 13th, we said, right? So I probably should go and mark that. We'll go ahead and say, yep, that's when we collected the premium and the stock has pulled it back. We weren't actually seeing a lot of weakness when we did that. It's just that we were in class together and we wanted to roll it. And so we went ahead and did so, and it's worked out. We wouldn't have wanted to wait until today, till we got together in class again, for it to be opportune to do that, okay? So when you sell a call against a longer dated option, you can decide how long that might take. Now you can use it, leave it up to your discretion, or you can put in stops or exit points to basically finalize that trade, basically buy the call back. Now, sometimes traders will look at it and they'll go, well, I'm just going to kind of watch it because it can continue to help that stock that's not performing well. If there's a little bit more that it can do, let's do it. Okay, this is where we're going to use the Theo price calculator for a minute. How far, let me give you a little bit of room here. How far do you think maybe right now it could pull back? The red moving average here is a 30. So it looks like it came right down to it today, probably closed close in that area. Just kind of zoom in here a little bit. We could put on other moving averages. We could also identify, well, where was some old resistance that should become new support? And for something like that, maybe we might look at, we could look at maybe the peak here. Let's go ahead and draw a line. That is going to be about, let's see where that kind of falls into. That falls into about, I don't know, maybe 182 and some change. And it looked like that's kind of where it ran up to here again recently. It went slightly higher than it did here, but it's kind of up in that same area before it started to roll down. So we could say, well, where, okay, so that was resistance there, maybe support. Could it come clear down here to 148? I guess it could. Okay, that would really be a pretty long drop for that. But it might not go quite that far. We can see the divergence here on this stock as well, this AMD, where the RSI, even though it went slightly higher, the RSI did not. Okay, so yeah, we're seeing a divergence here. Cameron, thank you. Cameron put out a video link as to one that he had done a while ago. Why did we call this a poor man's covered call? Okay. I have one that we have spent parts of our class on. Okay, we haven't spent dedicated a whole session to this for a while. So Cameron had done that recently, and Cameron's a great resource on that because he teaches the Getting Started with Option Strategies webcast. And so he'll have a lot of those different strategies that he's already mapped out on it. So appreciate you sharing that for Noodle Brain. All right. let's do this. Let's go to the trade tab. And again, you might just say, you know, how much might it fall? Could it fall to 148? Yeah, that would be a lot down there. I'm just going to write that number in here, though, in my little scratch pad. We go to the trade tab here, and we have our AMD option open here. And we can see here's our position sitting here. We sold it when it was probably a 30-something delta. Okay, now it's dropped down to about a 16 delta, and it could drop a little bit more. Now, the Theo price calculator, for those of you that maybe haven't been as exposed to this, maybe need a refresher, in order to use the Theo price calculator, you've got to choose it as a column, okay? If you don't have it selected here as a column, the calculator that sits right there does not show up, okay? So you've got to put that in as a column, which we have, and then we have our little calculator there. So I'm going to click on it, and I'm going to hit reset. We're just going to clear out whatever assumptions could have been in here, okay? And let's go ahead and say, okay, what if the stock drops maybe, where did it drop today? Today it dropped $9.50 bucks. What if it maybe drops another $6 tomorrow? Maybe not as big of a drop tomorrow possibly as the next day. But let's go in here and let's put in our price adjustment. And we'll just do it for $6 even. Not 60, but 6, okay? And then it'll show us the adjusted price down here. Now, that's not nearly as low as where that area of support is, right? This is just about 160.50, kind of pretty close to where my mouse is now. So a little way down, not a ton, okay? And then we're going to say, okay, if it does indeed drop $6 by a certain date, we're going to put in a different time frame than today. And we could even put this in here for, say, a couple of days out, okay? Say August 21st, so 2 more days. If the price of the stock were to drop, what would the value of our option be at that point? Now, we know when we sold it, we had $6 on it. We can see here that the ask price or the natural price here, like that, is looking like it's about $1.30. Well, actually, but since we sold it, we'd have to go buy it back for $1.34. If indeed it dropped another $6 or so, then the value of that option could be down there maybe around 45 cents. Would you be satisfied to go buy it back at 45 cents? Okay, imagine you're in this trade. Imagine you're putting yourself in that situation. You could put it in as an order, or you could just kind of try to wait and see and watch. Maybe it drops more than $6. That's a possibility too. Maybe it doesn't even drop $6. Maybe it goes up tomorrow, okay? We're going to say, all right, if it moves down maybe $6 more, that's possibly feasible. Let's go buy that, a little callback. We'll be buying it back for peanuts. We will have been locking in a good majority of the gain on the option, okay? So let's go take care of it. Let's put in a closing order for that, okay? So we'll say, okay, we're willing to buy it back. We're going to buy it back. The midpoint price here is about 45 cents. Okay, so Tommy says, yeah, I'd be willing to do that. Can we limit the column to 2 decimals? It's possible, I guess. I don't recall if we can do that. You might be able to. If this is annoying to you to see kind of after it gets below $1, you know, to see how far below $1 it goes. So in this case, we're looking at 45 cents. So that's what we're going to do. So come back to here, and we're going to say, let's go buy this back, create a closing order. Let's go buy it back if this option gets down to 45 cents. Okay, if it gets down to 45 cents, we're going to say, thank you for helping us out in that trade. Thank you for letting us sell so we could do that. Let's put it on as a GTC. We don't know if or when it really gets to that price, but if it does, we'll have the system go buy it back for us. All right, so that's another way that you can use that theoretical price calculator. All right, any questions there on that? If so, let us know. Cameron and I are keeping our eye on the chat. Something maybe we could take a quick look at. I want to take a look at YOU. YOU. This is one where, whoa, that's up even more than it was initially earlier here. We were experimenting last week with that Theo price calculator. And we bought a 32 call option and we put in a sell order. Let's see if it'll give us enough information here to either stop us out at what was at that time about 50% of the price of the option, so dwindled down to that point, or if it, this is saying whatever the base price was, basically looking for a $5.75 price based on what we plugged into the theoretical price calculator at that time. Okay. How many, let's look at the chart here, and then I want to know how many of you, that was you. YOU. These are the security guys people, so you can get through line faster. We got in here when it was breaking out of this flag formation. We actually had a pretty decent target on it, going up quite a bit. It didn't do very much for us, though, did it? We got in here, it pulled back a little bit, and then today it really had a nice gain on it. Okay. At this point, does anybody feel like maybe they might want to move up their stop loss to be bigger than 50% of the price of the option? Okay, that's what the question is. Notice here on the RSI how in this particular stock, when the price made a higher high, so did the RSI. Okay, made a high that was higher than the previous RSI high. And so that is showing non-divergence. It's showing, yeah, that is actually supporting the bullish position there. That's the other way you can use that RSI, is to say, yeah, did it make a higher high? Great. We weren't seeing that on the NDX and SPX. In any case, let's go look at the values here. We come back. We bought this option for $2.18 is what we ended up paying for it. So our stop loss now is at about 13, which at the time for what we thought we might get filled out was about 50% of that. Right now it's worth $3.20. How many of you would be interested to move up that stop loss? What if we were to put it at the value of what we paid for it, so that it would be close to a break-even trade if it pulled back that far? Okay, that's what we're going to do in this particular case. Now, do you have to do that? No, you absolutely don't have to do it. But some traders do, after they get a little bit of profit that seems like it's meaningful to capture. Sometimes we'll go out and change those orders to say, okay, then if it goes south on us, at least we're getting out pretty close to maybe where we got into the trade. Now, this doesn't include commissions on it. Okay, there'll always be those commissions and fees. So let's go do that to that stop loss order, and let's change it to be $2.18. Just seeing what Riceford thinks that's a good idea, that we should do that. Will says move it up. Tommy says 33, maybe using the price of the stock. If the price of the stock were to dip down to 33, a buck, yeah, that could be feasible as well. There's a lot of different things that we could put it as, okay? We could say, oh, if it goes lower than today's low. We could say if it goes lower than yesterday's low, right? And we could put in a value there based on that stock price. This one we're just going to do based on that option price. So let's go to our working orders and let's go find you. And let's see, let me make sure I'm getting the right order here. This was the one that was the stop loss. We're going to leave our target in here. If you want, at times you might adjust your targets as well. On this one, let's go ahead. We'll do a cancel replace order. And we're just going to put the actual price in there, which was it 213? I have a very short 218. 218. There we go. So we're going to say, okay, if the price dips down that low, trigger the market order, get out at the next available price. Okay, so that's what we're going to do on this. The other thing you could do is you could, if you wanted to, you could go down and say, okay, what if I wanted to do yesterday's low? How much is that pulling the stock back by? Yesterday's low was 33.03. So we could go and plug that in the Theo price calculator if we wanted to and make our exit be based on that as well. Okay, so there's a lot of ways you can use that calculator. It doesn't mean you're going to use all of them all of the time. In this case, we just said we're just going to do it based on what our entry price was here. So we're going to go ahead, we're going to submit this, we're going to send it in, and we've really managed a couple of positions here that we really want to stay on top of. And I hope it's helpful for you to kind of have this discussion about what could we do, what are we seeing, what makes sense for us to do in some of these scenarios. Okay. Now, in terms of, let's look at a couple of charts, maybe for a couple of new trades here. Here's one. Let's see if this chart still looks as wonderful as it did to me earlier today. Okay, Fortinet. Disappointed at earnings. They tried to recover here a little bit, but what are we seeing here? This kind of looks like a close below the low of the high day here. Okay, looking like us, okay, things might be getting to roll over. We can also look at this RSI and see, yeah, it definitely is lower, which is supporting what the trend of what the stock is doing right now, right? It made lower lows. RSI made, well, we made a lower low and I guess a lower high. I guess tomorrow or yesterday we could call a lower high, but we're basically seeing that trend change. Okay. So what could we consider doing here? Well, one, we're going to go to the trade tab and let's talk through a couple of things here. I've opened up the beta so that we could see the beta value. Those of you that have joined me in a couple of classes lately, we've been talking about using the beta to determine, is it more volatile than a stock on the S&P 500, an average stock? If it is, that's a value of 1. If it's more than that, and this one is, I'm going to say just a little bit more, then it's a little bit more volatile. Okay. What about these values in here? That implied volatility, would you say that's high, medium, low? Certainly there's things that have been much higher than that, okay? On this, I would say it falls in a kind of a medium, almost to the high range, okay? Not quite there, so I say it's a little bit on the medium side. What is that going to mean to us? Well, that's going to mean to us that the options probably are not going to be that pricey, might not be that juicy to sell. So maybe, and because it moves a little bit more than the average stock on the S&P, maybe let's look for something that's an option trade that we're going long on. And the one I had eyed here is doing a long put vertical. Let's see if these strikes still make sense. I had pegged 77, 50, 75. And I think it's actually moved a little bit more than that, but this still might be the ones we might be comfortable with. Let's roll out that number. Let's see what it looks like. It has moved a little bit more. Okay, so it's just going to grab then the 77 as our strike price. We're just going to swap it out there for a 75. You can see how much more open interest there is there. And this is a little bit lower than what we were looking at. And this might not, well, it might be okay. This would be saying we'd be risking 90 cents to make $2.50 minus the 90 cents. So we're actually risking a little bit to make a little bit more. Okay, we would have to look for it to move down. Now, something that's helpful is to say, okay, what's the short leg at 75? Does it look like it could easily make it to 75? Well, where is 75? Oops, I went a little bit past it, but 75 is about where my mouse is. Okay, so it was there last week, and you can see that lowest price there was 70 and some change. So is it that far away? No, not really. Would it be that big of an ask? Probably not, but let's go ahead and put in a trade here. If we're willing to risk 90 bucks in this trade, and we can risk in any particular trade, we can risk $1,500. We want to do a few contracts here. Okay, so $1,500, we're going to divide that by 90. It says we can do 16 contracts. So we're going to. Okay, we're going to do 16 contracts. If you weren't comfortable doing that many, you wouldn't. That's why it's so important to have lots of liquidity here in these options. Okay, so that we're just like a tiny little fish in the big sea. Now, Noodle Brain says, well, why do you go to 75 and not 70? You could go that far out. Okay, when you go that far out, it gives you wider risk to cover. So in this case, I think it's just best if we just keep it at $2.50. But you could spread it out wider if you wanted to. Yeah, you certainly could. We're using the 75. Yeah, you could come out here the 72.50 or 70. Yeah, you certainly could. Those are the ones that do have a lot of open interest. All right, let's go ahead. We're going to put in an order after we get this vertical going. If we can get a chunk of our max gain, we're going to do it and get out. We're not going to try to get every little last penny out of here. So let's create our opposite order. And let's go here. If we're risking 90 to make one, I think that should be, it should be 160. Let me just make sure, okay? We're gonna go 2.5 minus 90 cents, okay, $1.60. How much of this $1.60 could we be content with and get out? Like if it makes a sharp move for us, goes down, maybe hits our entry, our order that we have sitting out there. What if we could get 75% of it? Not hang out, not wait to try to get the last little bit. Okay, let's go for 75% of it. So I'm going to multiply this by 0.75. That gives us a value of 120. So we're going to add a value of 120 to the 90. That says get out then at what? 210, right? 120 plus the 90 should be 210. Let's make that a good till canceled. And, you know, if it executes it for us, great. We love it when that happens. We love it to execute early. But we're also in a time frame, 31 days, that is in a typical time frame that many traders like. Okay, so we're going to put this in our options strategies bucket right here. All right. Noodle Brain, when we were talking about the previous one, you were saying, I might move it a little further because you want to maybe get in a little bit of profit instead of just up to a break even. You know, if it makes a decent move for us tomorrow, that's likely what we would do is we'd say, okay, now let's start locking in profit. We did it to the break even. Now let's cinch it up. So yeah, I'm on the same wavelength with you. Okay, next up, we've got here, ooh, let's look at this one. And this is, oh, that's not the right stock, MSTR. All right, these guys are now called Strategy. They used to be MicroStrategy. They move quite a bit with how Bitcoin moves. Okay, so you might consider keeping track of that Bitcoin future, which is /BTC. And you can see Bitcoin's had some weakness in the last few days, and so has our STR. So is our stock here. Okay. The other thing that happened here is this looked like it was a decent support level here, about that 358. Man, it just broke through it here today. Now on this one, I want to show you. So we have what some might use as an entry point. And is the implied volatility high here? Yeah, it is pretty high. Look at this beta. Does this thing move or what? Yeah, this thing is a mover. If we had a strategy where we could be long an option that if implied volatility went up, because the stock might be dropping, a strategy that might look really good for that might be a put calendar. And that's what we're going to do on this particular stock. Okay. We are going to sell the September 5. So we're going to sell with about 17 days left. And then we're going to buy that monthly September 19. So I'm looking here. Let's see if this still makes sense to do the 320 contract. I wanted to go a little out of the money. And 320 is about right. Okay, about right there, sort of right there. Is that a big move? It's not really that big of a move for this stock. This stock is a mover, okay? So let's go with 320. And so we're going to, that's 330. Let's get to 320. 320. And we're going to just say buy calendar. All right, on the put side. So we're definitely looking for it to drop, but we're also hoping to capture some of that implied volatility in the front month that has a much higher theta value than the one that we're going to change here to be the 19th. Okay, so here's our 19th. Here's our 19th right here. About 505, that's pretty close to what I was looking at a little bit earlier today. So we're going to pay a 505 debit. And I just want to show you the Analyze tab here so that you can see, there's two of them in there. We'll just get rid of one of them so that you can see where's the peak profitability on this one. We're going to spend some time analyzing it next week, okay? But it's right here at this 320. But if it goes there pretty quickly, we might consider trading, we might consider closing the trade out. But we're going to have a bigger mindset that maybe it's more of a range that we might want to target, okay? Sure, would it be great here to have $1,000 plus profit on this? Sure it would, okay? However, that's up options expiration. And many times we're going to get out sooner than options expiration. Okay, so this is one I want us to spend a little bit of time on over the next couple of weeks, monitoring, managing, because we haven't had a lot of opportunities to do calendar spreads. Okay, so let's go ahead. We're going to put that to our option strategies class. We're going to keep our eye on that one here as well. Kevin says MSTR looks like it has a long head and shoulders pattern. Yeah, that very well could be. Yeah, that very well could be. And head and shoulders patterns will go over that length of prices, meaning it doesn't all happen in like 2 weeks. So yeah, very well could be. All right. I did not see a survey out here today, but I do hope if there was one, fill it out, but I don't think there is. Cameron will repost it again if I missed it. But if this was helpful to you today, hit like on your way out the door. Make sure you're a subscriber so you can find our content. Man, YouTube makes it easy for us to do that as a subscriber to find the content. And then Cameron and I would love a follow from you on our X as we post different types of information that might be helpful to you. Okay, so I appreciate your attendance here today. This is the very last class of the day. We'll be back bright and early tomorrow morning, right at the opening bell, with trading the markets. I think Kevin's going to be there tomorrow morning. So we will see you then. Have a great evening, everyone. I would say if you're trying to get to know any of these strategies that we've talked about today, which we've talked about a lot, do some in your paper money account. That's where you really are going to be able to learn. It's not enough to just watch me do it and Cameron do it and other coaches, but you actually doing it out in your paper account is going to make a big difference for you. Okay, so that is going to be my homework assignment to you. If you want to experiment with the Theo Price calculator, you have a little bit more exposure to it as well. All right, you guys, we will see you tomorrow morning. Good night.